To set a take profit for our trades, we want a method that can adapt to the current market volatility, so to how much the market is moving in that precise moment. To achieve this, we will use an indicator called average true range, or simply ATR. Let's first add the indicator to the chart, so we go to Indicators, type ATR, and here we have it, Average True Range. Let's click it, and now we have it on our chart. It appears as a simple line that shows a value that you can read on the top left corner of the indicator window, just like we have seen for the RSI. This value indicates the volatility of the currency pair for the calculation period. We're going to see in a second how the calculation period is set. Hovering over this point in time, for example, the ATR shows that the recent volatility is 7.2 pips. The value is shown in fractional pips, so if it shows 72, it means 72 fractional pips, or 7.2 pips. Let's have a look at the settings to better understand what this value means. Just like we have seen for the RSI, the first parameter is length. This means how many candlesticks the ATR considers when calculating volatility. If we leave this as 14, which is the default parameter, the ATR will calculate the average volatility for the last 14 candlesticks. For the ATR, we will leave all the settings as default, including the time frame as chart, because we want to apply the ATR calculations to the 5-minute time frame. So let's go back to the indicator. What does that mean that here we have an ATR value of 7.2 pips? It means that in the last 14 candlesticks, the price of euro-dollar has moved with an average volatility of 7.2 pips. This information is very useful for setting realistic take profit for our trades. Even if we don't have any signal on this chart, imagine we were considering a trade and we were considering setting a take profit of 200 pips. The ATR tells us, hey, what are you doing? I'm telling you that the price in the last 14 candlesticks has moved on average by only 7.2 pips. And you are setting a take profit of 200 pips? That's highly unrealistic right now. You need to set a smaller take profit. So, to set a realistic and achievable take profit for our positions, we will use the value of the ATR at the moment we open the trade. Let's clarify this with a practical example. We talked about this trade on euro-dollar in a previous lecture. Where should we set our take profit? The level of the ATR is 6.6 pips. The first thing we want to do is to round this to the nearest whole number. So we have 7 pips. From here, we will set 2 take profits. One that is 1 ATR from the entry, so 7 pips above the entry. The other take profit will be 2 ATR from the entry, so 14 pips above the entry. Let's draw the lines on the chart to have a better view. So we enter on this candlestick, the closing price is 1.07932, you can see it from here. Let's draw a horizontal line at 1.07932. Let's put the entry price precisely, and I also want to put a light blue color to indicate that this is our entry point. From here, we want to add 7 pips to reach our first take profit. Let's do it with the calculator just to be accurate. So 1.07932 plus 7 pips, which is 0.0007, and we have 1.08002. Let me draw a line, and I also input the exact value, and this time I want to change the line to a green color because this is my take profit line. Okay, this is our first take profit. We add another 7 pips to have our second take profit, so 1.08002 plus 7 pips and we have a 1.08072. And we are going to draw a line here for the second take profit. Okay, the goal is to close half of the position at the first take profit and the other half of the position at the second take profit. So let's say that we have a position for 0.10 lots here on euro dollar. We remove half of the position, so 0.05 lots here at the first ATR level, the first take profit, and the other half of the position, the remaining 0.05 lots on the second ATR level, which represents the second take profit. Let's see an example with a short position. Here we have pound against Australian dollar. Where should we enter our trade? We have an opportunity to enter a short position here with the RSI crossing 75. The price is 2.08388. Let's draw a horizontal line on our entry. Let's amend this quickly. And okay. The ATR is 12.3 pips. We round it to 12 pips, so our first take profit is 12 pips from the entry. So 2.08388 minus 12 pips, since this is a short position, and we have 2.08268 that we're going to represent with a horizontal line. The second take profit is another 12 pips down, so 24 pips from the entry, which represents two ATR levels. It is 2.08268 minus 12 pips, and we have 2.08148, and we represent it with another horizontal line. This is our entry. This is our first take profit, where we remove half of our position. And this is our second take profit, where we remove the other half of our position. Now, let's consider a tricky case. Here we have pound against US dollar. We want to open a long position on the RSI signal. So once again, I'm going to draw the line for the entry. The ATR is 5.9 pips, we round it to 6 pips, and we draw the lines for the first and for the second take profit. So 1.28838 plus 6 pips, we have the first take profit at 1.28898. Okay. While we add another 6 pips to find the second take profit, which will be at 1.28958. Okay, now you can see that the price reaches the first take profit, so we remove half of the position, then it misses the second take profit for less than 1 pip, and it goes back to our entry. What do we do? Does this change anything? Do we move the second take profit to the first ATR level, or do we keep it where it is on the second ATR level? Nothing has changed. We still keep the same take profits we set at the beginning of our trade. So the first take profit on the first ATR level, which has already been taken, and the second take profit on the second ATR level. The price then proceeds to hit the second take profit here, where we remove the second half of the position. So very easy rules for our take profit. We check the value of the ATR, we round to the nearest whole number, and we have our first take profit at 1 ATR length, in which we remove half of the position, and we have a second take profit at 2 ATR lengths, in which we remove the other half of the position. If it helps simplify your trading, especially at the beginning, you can draw lines on the chart to visualize the entry and the take profits. I normally trade without any graphical representation on the chart. I just set the numbers in my trades and I trade like that. If it helps, you can try the file on take profits that I have attached as a resource for this lecture. You just need to insert the entry price for your trade, the value of the ATR in fractional pips, so as it is displayed on TradingView, and whether it is a short position or a long position. And the file will give you the two levels of the take profit you need to set. In the section about position management, we will have an upgrade of this file, so this is just a temporary file that can help you at this point of the course to calculate take profit levels. We will have a more advanced file later in the course. If you're still not confident about how to set take profits with this strategy, don't worry, because at the end of this section, we're going to practice take profits with some live trades so that you can see how it works in real time.